Hello, and welcome to another Parent Epiphany webinar. I am Sharita Thompson, and with me today we have a special guest, Kwamara Thompson. She is my sister, so I just feel very fortunate to have her, and she's an extremely busy woman. So thank you so much for taking the time to speak with us today. I am going to let Kwamara introduce herself, and then we're going to talk about, all things, well, not all things financial, but, I think important topics for parents to think about as they're, planning their pregnancy, they're thinking about their children, how to support their families, and make really good decisions for themselves. So I hand it over to you.
Okay, great. Well, thank you so much. I feel really privileged to be here in any ways that I can support, obviously, my family and businesses. I'm so happy to do so. So as my sister said, my name is Kwamara Thompson, and I'm here to talk finances, but I'll just talk a little bit about who I am, how I got to this journey, and what makes me a little bit qualified or somewhat qualified to have this conversation. So I actually went to school, NYU Tisch School of the Arts, to be the next Spike Lee. As you see, that's clearly not the case, even though I still do a lot of things in the theater arts and in the filmmaking arts. But what I have done is I've had a successful business as an education consultant. But along the way, I have very much so diversified my income and have certain philosophies around finances, financial literacy, to the point where people sort of ask me, Kwamara, how did you get to this point? And I basically, when you think about my journey, I started off as an educator in Patterson Public School District with a salary of $25,000 a year. This was well over 10 years ago. But now I'm in a position where my net worth is over 7 figures. And people are always like, how in the world did you do that? And so that's what I really come here and talk about. I really think it's important that we have a lot of financial literacy conversations, that we're open and honest about our finances, that we talk about some of the mistakes we've made, some of the great wins that we've done, and really talk about some of the things that they don't tell you in K-12 education. As I said, I'm an expert in K-12. I know exactly what's going on in the K-12 education space. And what's not going on is helping people talk about managing their money, thinking about money in ways that don't feel judgmental, and really thinking about ways to attain financial freedom. And as folks know, and as the title of this webinar series is, I really believe that financial freedom is our only hope. It is so important for us to build financial freedom within our own generation, but also extend it as generational wealth. And I thought it was so important to come here and talk to parents, because this is a great time to think about how can you set up your children that you're having that either are born or being created right now for their financial futures.
That's great. Yes. I know when Anthony and I were pregnant, it was really stressful. Both pregnancies actually were very stressful because financially we did not feel like we were in a good place. So for a couple like us, what would you recommend? I mean, should we start doing a budget? What's the first step?
Yeah, I think there's a few things that are, and I'll talk about kind of all of them. And I'm a big geek, so I do have my notes on my phone for the things that I just kind of want to talk about. But one of the things that I think is really important, and Shrita, you know this because our parents really invested a lot of money into our education to ensure that we really would have great futures. And so I think it's so important to start thinking about how to create a 529 account, which is an education account for your students and for your kids. Sorry, I slipped into educational speak and talked about students, but for your children, it's so important to set up a 529 account. And that account can really be, you start off with a small amount of money, $100, $200, and then you swing over $5, $10 every month. And what's really great is that you can have friends and family also contribute to that account. So oftentimes we have events such as gender reveals and baby showers where people give you gifts. And I understand the importance of having those gifts so that you have these, you have clothes and baby seats and et cetera that you need. But also you could also ask for people to contribute to that 529 account. And there are applications and apps that allow you to do that, where you don't have to necessarily give full disclosure of your information. There's an apps, that people can do, and then just click it over and sign off into the things that you're up to. So I think that's a really great thing, like really having your family and your network help bring up that education account. The other thing that I would start kind of investing in, and I know you talked about budget, but I want to talk about just how can you invest in things to help your children have a good financial plateau and good financial future in going forward. And the other thing is maybe creating a little life insurance policy for your students. It doesn't take, for your kids, it doesn't take very long, and it's not a lot of money to create a life insurance as soon as they're born. Obviously with their social security number. And by the time they're 18 or 21, they have a pot of money that they can use. And during that time, from 18 to 21, hopefully you would have taught them some financial literacy. I saw in the website that you guys are going to be talking to my friend, Sammy Rex, next week, who's really going to be talking a lot about how you can engage your students in financial literacy. And I think that is so important, because one of the things that I'm realizing is there are people like us who are older than us who don't know anything about money. And that's not their fault. It's because our public school systems do not spend a lot of time talking about money. So really ensuring that your kids understand money, they understand the value of money, they understand how to invest in savings. And he'll give you tips and tricks for students who are really young. But I think it's important that we don't use money as a shameful tool, but as just a tool that is normal dialogue, so that students understand, kids understand exactly what's going on when you're talking about money. They can go shopping with you. They can look at the receipts. They can be excited about the little bit of money that they have. If you give your kids allowance currently, so there's so many different things that you can do with the allowance, right? You can explain to them like, okay, if you save this amount of money right now, you can get something that you really want, or do you really want to use it right now, right? So what's about immediacy? What's about waiting to get something bigger? So understanding savings. You can go with them to set up a bank account, and that bank account can be, obviously we can't go, well, I don't know about everywhere across the country. Some of us can go places, some of us can't because of the pandemic, but I wouldn't necessarily have to even go to a bank. You can have them set up an online bank account that has some really great investments and returns. But let's talk to your original question, which was, what about budget? What can I do to get some more income now? Because having kids is expensive, and we know that. There are a few tricks that I like to tell folks around, and I call it income shifting. So when you're thinking about your budget and you're thinking about the ways that you can use your money, I always say every year or even every 6 months, call your bill providers. What I have often found is that if you call your bill providers and you tell them, hey, what's the latest discount that you have going on right now? They will give you a discount. They won't offer it to you because they want you to continue to pay the amount of money that you're paying. But if you call them, or if you go to their website and use their chat functionality, or send them an email and say, hey, what are the discounts that I qualify for, etc., you often find that you can get some discounts. I did this about 2 months ago, right at the beginning of this pandemic that is going on, and I've been able to save over $100 on my monthly bill expenses. And I'll talk a little bit about some of the things that I found. I found out that your cell phone provider will give you a discount because you're employed. I had no idea. Had no idea that just because I got a paycheck every couple weeks or every week or however often you get paid, that if I showed them proof of that, I would get a discount for having those, for having a job, right? Again, for the cable, I literally was like, hey, I would love to know what are the promotions that you have going on right now? How can I save on some money? And they gave me a discount of $20 a month. So these little things where you can save $5 here, $10 there, $20 just by calling up or chatting on the website or emailing your bill providers has been super helpful. And actually, one other tip that I would say is that I prefer to, I'm not really a phone person, so I prefer to chat via the chat, like on their website, or to email them. But the other benefit of doing that is you have a written documentation of what you discussed and what's supposed to happen. So if you see that your bill has not been adjusted appropriately, you can say to them, hey, I had this conversation. here's the evidence that I had this conversation. This is what I'm supposed to be getting. Why am I not getting this, etc. And I have
That is
found
great.
go back and change up the bill from the time that date was supposed to happen, because it could be that those folks are busy, they forget to whatever check whatever button needs to happen, and so you find that your bill is exactly the same, and that's a problem. The other thing that I do suggest, and people feel different ways about it, but I believe in automatic bill pay. Automatic bill pay gives you automatically, you get deductions from doing the automatic bill pay. Very rarely does your bill change, but if you notice, because they'll give you an advance email to say in a few days or in a week or in 2 weeks we're going to debit your account, and if you disagree, then obviously you can actually stop the payment for that month, talk to them and figure out what's going on. So I always say set your alerts, but I think it's worthwhile to definitely do the automatic bill payments. The other thing that I do, and I don't know if this is across the country, but here in New Jersey, our electric and gas company provides us with the ability to do what they call equal payment plan. So they see how much energy and gas we used the previous year, and then they just give us a monthly payment, so you know exactly for your budget what it's going to be, instead of it changing by seasons and you don't know. And I prefer to just sort of go that route, so that I know exactly what I can budget for my electric and gas and utilities going forward. I guess I'll pause there because I feel like I've said a lot and to see if there are any questions.
Yeah, well, no, I just wanted to say one, I love that suggestion about the chat because I actually had an incident where with our alarm company, ADT, and they were doing some promotion, something, right? I had reached out to them. They were going to reduce our bill and it never happened. And so I had to keep going back and referencing the phone conversation and all these things. And, of course, they're like, we don't see it, or, da 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 da. Eventually they did, they gave us the discount, but it was such a hassle, right? It was such a hassle to go through that. So I love this idea of having the chat as proof, right? Proof that the conversation happened, was agreed upon and that it should take effect. And then we also have something about, with our electricity where we are able to budget because again, when we were pregnant the first time, we had just moved into our home. So there were a lot of expenses that we were not aware of, right? Electricity was one of them. Electricity out here where we live, out in the rural area of Arizona, it's super expensive. And that first year really hurt us. So we were grateful for the following year that we were able to adjust it and have a consistent bill throughout the year, which has been really nice. So I definitely do recommend that. Was a huge relief for us to budget. And I will say I'm one of those people that I have mixed feelings about the automatic bill pay. I've heard different things. I've heard you should do it through your own bank, versus the company because it's easier to stop payment, right? If it's through your bank versus the company. And so I'm definitely one of those people. I have some bills that are automatic. I have other bills that aren't, just, because of how comfortable I feel, my comfort level. So that definitely is a personal choice, but it makes sense. If you know that something is going to happen every month, then let it come out and not have to deal with it. Because I will say on the flip side, I have paid some bills late. And that can affect, either your credit score or whatever, depending on the company, because some of them will report you to collections rather quickly, right? So just remember, if you are going to do it yourself, set those reminders. I think that's really important. I have reminders on my calendar, but still life happens, right? And sometimes you forget. So I do think there's a benefit to having automatic bill payments. And again, I think it goes back to this budget. I think budgeting is really important, when you think about your family and like what their needs are and, and savings too, right? Making sure that you're putting away savings for you, emergency savings, and for your family. So I think all of these things sort of feed into each other.
Yeah, I totally agree. And just a couple of notes around the automatic bill pay. So you only get the discount if you do the automatic bill pay, with them being able to discount your money, not going through your bank. And ironically, I've had the other issue, which is I've had my bank do some automatic bill payments, and for whatever reason, the payment never reached on time. And then I was the one who had to deal with all of that, versus when the company can go in and receive their funds. And even if it's more of a headache for me to get monies back, I'd rather do that, because credit, I mean, I think I said this, cash is king, but credit is queen, and credit is so important. And actually, credit will affect your utility rates in so many different ways that people do not realize and understand. So for example, let's take the electricity that we just talked about. Everyone has to pay their electric bill in order to function, have a functioning house, etc. If you and I at the same exact time, let's say we both have the same house, we live in a 3-bedroom house, it's 2 bathrooms, we have the exact same amount of people living in that house, right? We have our partner, and we have, let's say, 2 kids, we all use the same amount of energy. I go in and you go in to say, I need my electricity turned on because I'm moving into this house. You have better credit than me. You have a better rate, a lower rate. So we might use the same amount of electricity every month, air conditioning or heating, but I end up paying more because I had bad credit, and you pay less because you had good credit. And so it's so important that even if you currently do not have great credit, that we do think about ways to raise those credit scores, because not only does it help you obviously to get your car loans and your mortgage and all those things that you know about, but it actually really affects the way that you pay your monthly bills. And that's another way that you can start saving money. That's a long-term thought process, right? To ensure that you have good credit. And by good credit for a utility company, it's usually something in the mid 600s. It's not as high of a standard necessarily for when you get your mortgage or your car loan, which is more like 700 is what they're really looking for good interest rates. But to everyone's point, you already know that if you have bad credit and you do get a car loan, your interest rate is higher. Same thing for your mortgage. So your monthly payments for the same exact car that someone else got is more. And think about the amount of money that you could now have shifted back to you, back to savings, that you can go ahead, put in your savings, etc. And I'm glad you put the point about savings, because lots of folks do this when they get their paycheck. They get their paycheck and they pay all the bills, which sounds like the right thing to do. And I'm not suggesting don't pay your bills, but what I am suggesting is that you pay yourself first and then pay your bills. And what do I mean by that? I mean that you pay your money into your savings account, that you pay your money into your retirement accounts, that you pay your money that you need into your life insurance accounts. If you're a parent, you absolutely need life insurance, because what if something happens to you? What's going to happen to your children going forward, right? So those are the things that need to be paid first. Then you can get to your living expenses, your mortgage, your rent, your electricity, your water bill, etc. But you got to pay yourself first. I say try to, out of your income, 10% at least, at minimum, should go into savings. And then you should feel comfortable when you have about a year and a half worth of living expenses saved up into your account. It used to be, oh, if you have 6 months, you'll be fine. We are finding, especially during the pandemic, that is not the case. So I definitely say, it's a good year and a half worth of living expenses should be in a savings account that you have. And I would even, even if you could do 2 years, especially if you are a parent and, who knows what's going on. You don't want a situation where you lose your home, where you lose your financial and food security for your kids. That's a terrible place to be. It's a terrible place to be.
Yes, that's a good point. So many thoughts like entered my mind during that conversation, because I was like, I'm thinking about savings. I'm thinking about what other expenses came up as a parent, right? Like daycare. We had no idea how much daycare was, right? Like sometimes you just don't know how much these things are. You can do your research, you can do like whether are the best schools or whatever, but when you're actually living it and seeing how much money comes out every week, it's a lot. And then, adding another child and all these other things. And so, I think my question to you out of this, savings, right, is how do we fight the urge not to dip into our savings?
Well, I definitely put some foolproof measures in place, because if your savings is connected to your checkings account, it'll be very easy to dip right up in there because it's really accessible, right? So one of the things to think about is, can your savings account be in a completely different bank? Can it be really hard for you to get? Can you have not access to it? So I say, so a lot of times I actually have quite a few savings accounts in credit unions, and I like credit unions because you literally technically own part of the credit union, which to me makes me feel good, like when I'm putting money somewhere, to know that I have ownership of something. So I do try to put my savings account in a credit union. Now, that being said, I do have a savings account connected to my checking account, so that in the event that I forget how much money is in my checking account, I don't get overdraft fees, etc. But in that savings account, it's just a minimal, that's not my real savings account. It's just a minimal amount of money to cover just some overages that I may have forgotten about during my weekly, monthly budgeting. But that savings account that's supposed to have that 2 years or 18 months worth of savings is in a credit union far away, can't touch it, can't look at it. So that it's not easily accessible. That's what I have to do, because if I could get to it, I might want to get to it. Might dip in and be like, oh, I want to take this vacation, or I want to go do this. I have the money; it's here. So
Exactly.
so I have to do that. So I try to, in that sense, I do out of sight, out of mind. And then people say, well, how do you change? Put all your money the way that it's supposed to be. So I get direct deposit, and I hope that most of you all do get direct deposit, because if you're still cashing your check, just think about the time that it takes you to do that. Sometimes you have a fee associated with cashing your check. It's a problem, not getting your full amount of money. So if you're getting your direct deposit, I set up in my bank already. I know, okay, I get paid every 2 weeks on a Friday. And on that same Friday, I have all of my transfer money sent out. So I send out my 10% to that particular savings account. I send out another 10% to another account that I have. Just based off of my financial strategy, it automatically will happen every 2 weeks. Don't think about it. I set it up, take the time, set it up, and then it just goes off. Because again, if I have to take the time every single time that my check comes in to do something and pay myself first, I may not do it. It may not do it. It has to be automatic, and it has to be a habit that we do, right? So I try to make these things as easy as possible, as seamless as possible. Not much thinking that has to happen. I thought about it once, and then that's it. We'll look at it again until like 6 months out, or maybe a year out, when I want to make some adjustments, either because I got a raise or something else came up, or I just think it's important every year, to just really think about all the ways that your financial institutions are working together. What does your retirement account look like? Talking to your financial advisor. So just like a health check, I do those financial health checks as well. So yeah, so just on a yearly basis. The other piece that I do want to talk about, which I know is mind-blowing for so many people, but I do not believe in tax returns. People are like, what are you talking about? I don't believe in tax returns. If you have a regular 9 to 5 job, and you pay a certain amount of taxes, every year, that are taken out. So let's say that over the course of a year, you had $10,000 taken out of your paychecks for the course of the year, and then you're like, I'm gonna file my tax return, and I'm gonna get some money back, and then you get maybe $2,000 back. Okay, and you feel happy, you might go on a shopping spree or whatever, but you paid that 10,000, you got 2,000 back. But let's actually say that out of that 10,000, what your true tax burden was only $6,000. You actually have overpaid the government, and they only give you a percentage of that back. They never give you the correct amount back. They keep more than what you're supposed to have. So what you should be thinking about is checking your W-4 every year, do the W-4 tax calculator, and say, I want to receive no money back. And then you pay the exact amount of taxes that you owe, and all that extra tax burden that you used to pay actually goes into your paycheck, and then you can use it. And now you've got an extra $3,000 or $4,000 for the year. And these are just random numbers that I'm putting together, right? Everybody's situation is different. I have seen people realize that they had overpaid the government on a yearly basis by $18,000.
Wow.
Imagine what you could do with that extra money, right? So those are the things that you should be looking at and really saying, like, oh, this is a scam, really. Like, I'm excited for this $3,000, but technically the government has taken over $2,000 that they weren't supposed to do for me. And now what? I'm happy because I have $3,000? It makes no sense.
Yeah. Well, and I think it goes back to, right, this like financial literacy. I mean, if you just don't know, if you don't understand that, if it's the way that it's been done, then you sort of just fall in line with that. Um, One thing I will say is, both my husband and I have full-time jobs, and we have employee assistant programs, and they do offer, or they're able to oftentimes assist you. Like, right, if you have questions about financial things, right, you can go to them and ask them to meet with a financial advisor. So I do want to say that there are ways, like some people don't even know where to start. That would be a great place to start. If you literally have no idea what you need to do, and you're currently employed, I highly recommend that you reach out to your HR and talk about your employee assistant programs, so that you can connect with a financial advisor.
And in addition to that, in most cases, if you are employed, you are contributing to a retirement plan of some kind. By the way, if you haven't maxed out your contributions, you should, because those are pre-tax dollars. But more importantly, if you have a retirement plan through your company, they are associated with a financial company. So you can do your financial advisor through them, and you should really talk to them about what kind of retirement plan do they have you in? Do they have you in one that's high risk, low risk, moderate risk? And again, you want to have these conversations on a yearly basis because your risk tolerance will change. When you are, I would say, single and have no kids, you might have a higher risk tolerance. When you start having children, your risk tolerance might go to a more moderate level or even a low level. So you want to have those conversations. And then oftentimes they will ask you, well, how much money do you want to make during your retirement? What do you want your monthly payment to be? And if you're not paying attention, you might be investing into an account that has your monthly payment when you retire at $1,500 a month. Well, we all know that's no kind of money to live on, right? So you want to ensure and be like, no, I want to live off of $3,000 a month once I retire, et cetera. So they can walk you through the steps and make sure you're in the correct plans to get there. So absolutely, if you are employed, you need to go ahead and talk to that company. You need to know. Sharita, it is so mind-boggling how many people who are like, I don't even know who's handling my retirement. And I'm like, what do you don't even know the name of the company that's handling your retirement? They're like, no. I'm like, no. Okay. You need to get your documentation. You need to find out this information, and you need to call them, or you need to email them, or you need to figure out how to log into your account. There is an account that you can look at when you monitor what's going on.
Yes. There's an account. You're probably getting mail. You may not even realize you're getting mail from them. I get mail. I don't know about anyone else, but that's, I know what that is. Sometimes I think maybe we think it's junk mail, who knows, but you're right. I think oftentimes we're just not even fully informed of what is available to us, what's coming to us. And, don't be afraid, right? I think the biggest takeaway, you started out saying, don't be afraid, right? That the biggest, what was I going to say? I was going to say mistake, but it's not mistake. But, this financial literacy and not being comfortable with money and having these conversations and handling it really is a great disservice to the American society. And so we really need to come up with ways to feel empowered so that later on we're not feeling like, oh my gosh, where did all my money go? Or why didn't I know to save better? And that's why I think this conversation, and like you said, next week's conversation with Sam is so important. It's so important. So thank you for that. And and sometimes we have to be uncomfortable, right? To like make change happen. I mean, that's just That just is the way that it is sometimes. Change is uncomfortable, but after the uncomfortableness, you will be empowered. You will have the information that you either need or you will know how to get it.
Yeah, I totally agree. And so just a couple of other things. If you are employed through a 9 to 5, we talked about retirement, we talked about your education your employment assistance program, EAP, that you can have. The other thing is a lot of folks still offer health savings accounts.
Yeah.
Or flexible savings accounts. So that's something else you may want to look into. People are like, why would I want to invest in that? Those are what we call pre-tax dollars. So yes, you have your health insurance, et cetera. But if you have to pay your copay, if you have to pay your copay without your health savings account, that comes after your tax dollars, right? But if you have that money in a health savings account that usually comes out in a card that you receive, you can pay it off your pre-tax dollars. So before your tax, that money goes into your health savings or your flexible savings accounts. So something else to just look into. And I find that, people don't really understand what's the importance of having something that's pre-tax versus after tax. But if you look at your pay stubs, you realize that you made more money before you were taxed, and you want the things to come out of the amount that you have pre-tax, because that's more money that you can go pull from versus you're paying for things that have been taxed out afterwards. So just something else that people should look into. The other thing.
Oh, sorry. Well, I was just going to say, I talked to a friend recently about that because she wasn't familiar with, we have an FSA. She wasn't familiar with that. And she goes, why do you do that? And I said, well, because our taxable income, so this is what it ultimately means, just so that everyone's very clear. It's a smaller amount, right? When you get taxed, you're taxed off your total. So if you have a higher amount, you're going to get taxed more. When you have your FSA, HSA, dependent care, all those things coming out prior to your taxes, it reduces the total amount. And so when they say, okay, this is your percentage, it's smaller, just to make it like very simple. That essentially is what it does and why it is in your best interest to do it.
I agree. Now for folks who have a 9 to 5 or don't have a 9 to 5, but have a side hustle, side gig, doing their blogs, their mom bloggers, mompreneurs out there. One of the things that I do think is key is ensuring that not that you're doing things just as a DBA, you're out there as a consultant, but ensuring that you've actually created a small business and you've created some kind of LLC, and that you're identified through the taxes, through the IRS as a business, because that also helps with your income shifting, and that also helps with your bills. So for example, let's say you make $80,000 a year. You have a 9 to 5, you make $80,000 a year, but you are also a mom blogger. And maybe some people, you have some ads that run on your blog, you make a little bit of money. When you're just doing it just as an independent consultant, you've got your 1099, there's not really much tax benefit, to be quite frank. But if you've decided to create yourself a small business, you can then go ahead and attach yourself to your small business, and you can do a whole bunch of tax write-offs. By the way, your small business has to be the address on file has to be the address that you live in, so that you can maximize all of these tax deductible pieces on your taxes. So for example, what becomes tax deductible is your mortgage, is your rent, is your utility, is your cable bill, because now your business is run out of your home. And once you start putting those tax deductible items onto your when you file your taxes, that $80,000 that you were taxed on then becomes less. And you could find that you're only taxed on $50,000 versus $80,000, which, as we know, again, saves you money. And that money can then be brought more into your savings account, can be hopped into your budget for you to do some maneuvering around, etc. So some things to think about there. The other piece is, if you do create a small business, another thing to think about is you can, which some people feel certain different ways about it, but you can do it. You can hire your children as employees, and
Okay.
if you give them an allowance, that allowance is payroll, and then you can use that as a tax deductible because you have payroll for your employees. Uh, so just
Interesting.
something to think about. Yes.
Was not aware, but what I will say is I think that's why it really is important if you do have a company LLC, however you've decided to, establish yourself, meet with an accountant.
Oh yeah, absolutely.
Because the other thing is, and maybe we should have prefaced this before too, but every state is different, right? There's different state taxes and things like that. So you definitely want to meet with an expert for your state who is knowledgeable in what is and can be tax deductible and how that all works and, credits, whatever the case is. So I just wanted to put that out there, but I appreciate that because again, I don't think everyone knows. And oftentimes I talk with some people, they don't want to form an LLC or they don't want to, do these things for whatever reason. Maybe they're not informed of the benefits, whatever the case is. But I think if you know what they are, then you can make a decision as to how to, move forward.
Yeah, absolutely. I think that's absolutely correct. And I'm glad you brought up the disclaimer. So I should make my own. I am not a certified financial advisor, financial planner. So absolutely go talk to your certified financial advisor, financial planner. And you can find them all over. They are worth the money to invest in because you're really thinking about your financial health, right? A lot of times we invest in so many different things and we're always like, oh man, I can't find $5 or $10 to scrape together, but we do for the things that we want to find $5 or $10 for. We find
Yeah.
that, and I think it's important that we find that money also to really have a great strategic financial advisor who's a partner with you, who really thinks about the things that you're looking for, right? I just come on and I like to talk about finances because no one does it. No one has these conversations for lots of reasons. People don't understand, they don't know what's going on, etc. And then there's a lot of stigma around if you're in debt, if you have bad credit, if you live paycheck to paycheck. There's so much stigma around how much wealth you have or don't have in this society. And I really want us to get away from thinking about and valuing people based off of how much money they do or do not have. And the ways to do that is through education, is through empowerment and having these honest discussions with each other.
Yes. And like I said, there is going to be discomfort, but you have to work through that. And that's what I'm finding out. Last week we had a conversation on mindfulness and now we're talking about financial things because, people, it's like in the back of your mind, it's really important, but you don't even know where to start to ask these questions. Like, who do you go to? And so that's why I thought having this webinar series was just so important to start conversations to break that, right? Like, let's not be uncomfortable. And, oftentimes I've gotten a little bit more comfortable. I will not say I'm definitely nowhere financially secure as I want to be, but right, given some of the things that have come up, and that's what I will say, like situations that have come up have made me think about, okay, I need to understand these things better. What can I do? Whether it's a webinar, whether it's connecting with an accountant. I was, H&R Block, oftentimes those bigger companies have webinars for their customers or people who sign up for their mailing list. So sign up, see if there's topics of interest and watch it. It's a great place to start just to get a baseline.
Yeah, I totally agree. And I hold my own, talks every Monday where people just come in and we have conversation and we share ideas. And someone asked me, what do I read or what do I do to also make sure that I'm kept abreast of all the things that are going on. So essentially, I will just talk a little bit about some of my recommendations, if that's okay. I follow CNBC quite frequently. I follow Bloomberg. So every day I'm reading articles on CNBC, Bloomberg, Business Insider to get an idea of how to really work through finances. Forbes also is obviously another good trade magazine. On top of the investments that I have through my quote unquote 9 to 5, I also have my own separate brokerage accounts, and I do that through E-Trade. I find E-Trade to be a really great self investing tool where I have a brokerage account and I have a Roth IRA there. And IRAs are retirement accounts for folks who are just wondering what an IRA is. It's an investment and retirement account. And so I go there and I play around in the stock market, but they're also easy to access. I can call them if I have any questions, and I manage those accounts separately. And then, of course, the company that my company goes through, manages my retirement accounts. And that's the other thing that I like to point out for anyone, all adults. We should really have a very diversified investment portfolio and very diversified investment vehicles. So yes, keep your retirement, like I said, max out your contributions, make sure and hope that your employer also contributes to your retirement account. But I also say it's important to invest in your own separate retirement accounts. It's something that you can tangibly hold on to, or find a separate financial advisor, financial planner to do something not tied to your company. And I say that for a few reasons. I have a philosophy around not being beholden to one person or one thing for any one thing that I do in my life, which is why I diversify everything. I have diverse incomes, and I have diverse ways that I invest. I also like to invest in different types of industries. So as a lot of my family members know, I have real estate. Real estate is an important investment for me. It's something that I feel comfortable in and I know it very well. But you might want to invest in other different things. You can invest in healthcare, education, technology companies, tech companies, period, I would say, right now. You might want to invest right now in StreamYard, Zoom. I mean, there's so many different things that you might want to think about. Where is the world of work going? Where are industries that you think are going to be picking up? And you might want to just invest in those particular industries through mutual funds, for example. You can also use life insurance as an investment vehicle. So you can look at whole life insurance. This is different than just your regular term life insurance. I'm not going to go into all the particulars because I am not a certified life insurance advisor. But again, these are the type of people that you should have, that you should invest in, that you should, I call them like have a team. And you should have a team that is a tax accountant, an accountant, a financial advisor, someone who understands life insurance. Absolutely. And also, I think you should I keep a lawyer on retainer. I think it's important to keep a lawyer on retainer. You all are all parents. If you do not have a living will, you need to get one. If you don't have a will, period, you absolutely need to get one. If you don't have life insurance, you absolutely need life insurance. Like, these are things that are going to be set in place to protect the things that you have worked hard for and to ensure that your children are taken care of in the event that you can't take care of them. And it's not just death, right? It could be that you're incapacitated and you can't take care of them. That's the importance of having a living will. So you want to have all of those things set up, and you want to have those team of people around you because they're the experts. They can tell you exactly, know exactly what the product line is. They'll know exactly what your strategy is. And you talk to them. You have a really good relationship. You should have the type of relationship with them that you have with the person who does your nail, your hair, your barber. I hear people talking about they love their barber, they love their person who does their hair, but they have no idea who's handling their finances. No, you need to have the same type of relationship with those people as well.
That's a really great point. I actually never thought about it that way. One of the things that we do talk about as a doula and things like that, right? Building your support team for birth, for pregnancy, for after, that's what we're all about at Parent Epiphany, right? We're part of that team supporting you. But you're right. There's something to be said about having a financial team, or just thinking about a team in general. You're not an expert in everything. So who are you going to bring into your life to support you where you need more information? And so I love that, sort of analogy about, I love my hairstylist. You're right. I'm like, I can't even think about going to anyone else right now because I feel like they are life right now, right? Like, they know my hair. I've been with them for years. Like, I trust her. Like, that's the thing. At the end of the day, you have built these relationships you trust. And so that's how it should be with your circle of experts. It should be people that you have gotten to know, you trust them and their expertise, right? They're experts in their profession. So I really like things. I never thought about it that way outside of, which is kind of funny, outside of this. But it's true. I mean, you're right. That's why we have schools. That's why we have teachers. Like, that is their profession. That is their expertise. And that's what a lot of people are understanding now, right? They can't homeschool. They are not teachers, and that's okay. So we're learning a lot right now. So thank you for that.
Yeah, absolutely. I'm gonna shout out Mom because she's gonna send me some text messages talking about, I thought you were gonna check my phone. So she wants me to say a few things. So let me go ahead and hop in. This is a Thompson family affair, y'all.
Okay.
So this is what you texted me, and this is I totally agree with what our mother has to say. It's important to have the IRS only take out what you should be paying, because otherwise you're giving the government an interest-free loan. Holler, let's snap to that. That way you can put the money away versus just getting it back when you file your taxes. Exactly what I was trying to say, that money would now be in your checks. You will now have them to use and invest as you please versus overpaying the government, who now has your money. And as we know, our government is never accountable to what they do with our money. So we won't go into politics, but the less we give them, the better off we all will be.
No, but it is true. And, at the end of the day, yeah, you could be getting interest off of that. I know interest amounts right now are low, but still you could be putting that in your savings and getting interest versus the government. So it is sound advice. Thanks, Mom. I'm glad that Kwamara was able to bring that in.
I wasn't trying to cut before, but it came across my computer screen. I was like, let me go ahead and take a look, see what this is.
Oh, I like that. Yes, I definitely am not connected through my computer. That is too funny. We are getting closer to time. We still have about 10 more minutes. So I just want to make sure that we are hitting on, I know you were thinking about this presentation and thinking on things that parents should know about. So I want to make sure that we're not missing anything before we close out. So is there anything that we haven't talked about that you think parents should know?
Yeah, so I've already said this already, but ensuring that we have conversations with money with our with our kids, so that they will not have the issues that we're having as adults, but that they really have a good, positive relationship with money, and they really understand it. And obviously, Sammy is going to talk a little bit more about how you can actually give them some curriculum and some tips, but just some things to think about to set your kids up for a good financial future. So I already talked about the 529 education account, obviously, because education is super important to me. I am a lifelong educator, etc. But some other things that you might want to think about, which are, can you help your kids build up their own credit? Do not use their credit to their detriment, but can you figure out ways that you can use their credit to use them to build up your credit, whether that's because you yourself have good credit and you can add them onto your credit card, etc., and help them build up the credit. And I would actually, and people are like, oh man, that feels kind of weird. But we know that there's a lot of identity theft going on, and they're going after kids. You might as well just use it already for your own kids to protect their credit, etc., and build up their credit. And the other thing is, you might want to think about creating and or investing in a business for your child. One of the biggest wealth creators in this country is entrepreneurship. It is not really working for somebody else and having a good paycheck. I mean, some people have created, or some people get good income that way, but then they use that money as investment vehicles to really create wealth. But the majority of people who are super wealthy in this country are entrepreneurs. And so it might be worthwhile for you and your kids to go in on a business together, learn a little bit more about entrepreneurship, build a business for them, or with them, I should say. And I know that we're talking about new parents, but if you have older children, this might be something to think about. So I just wanted to talk about how it's also important to not only talk to your students around money, but what are the ways that you can set them up for financial success for when they become adults?
Yeah, I mean, I feel like a lot of those stories have been happening. You see, there was a young man who made bow ties, right? And so, having his business, I know, I think that gentleman or someone else, or, that kid, he was on Shark Tank. And so he was with his mom, and, they were presenting, and all of them said no, because you should own it. You should own it, but we'll help you, we'll mentor you, because this is yours. And so I really love that, and I love this idea of creating something with your children, so that you all can experience, hopefully success, and see it grow and impact other people's lives in a positive way. Um, I love that. I love that idea.
Just
Um,
about who you're talking about Moes Bows, and I was presenting at a conference in San Francisco a year or two ago, and he was there with his mom selling his bow ties and little kerchiefs. And so I went there, and he had a T-shirt, and I was like, "Oh, I'm just gonna buy this $20 T-shirt." Well, girl, I left having spent $150. I wear his ties quite a bit. I gave Dad a bow tie of his. I have a bow tie of his. And so really supporting. His name is Moes Bows. His name is Mo, but the name of the company is Moes Bows, and he's out of Memphis, Tennessee. And it's like you said, it's a young boy and his mother, and it is an awesome. And they make great quality product, by the way. Their ties and everything they do is made out of cloth. So it is amazing. I love to see these stories of kids and their entrepreneurship, like the young girl who has the lemonade that I think that it's in Whole Foods. She sells it out of Whole Foods right now. I
okay.
don't know the name of the company, but she's like 10. I mean, it's just fascinating to see these
Yeah.
stories.
Yeah, it truly is. And I mean, ultimately, you might have this idea or whatever, but if you don't do anything, you won't know. So I say give it a shot. I love that encouragement. One thing, because, right, a lot of parents, we're on our phones, so are there any apps or anything, on our phones right now that you find helpful, that can help us save money, or whatever? I don't know. Is it we use Credit Karma, for example? Is Credit Karma something that you recommend, that you use when you're sort of thinking about, right, keeping track of your credit score? I don't know. I'm just trying to think about tools that our audience can use to help them.
You can use Credit Karma. It's a self gauging tool, which is fine. So I don't have any problem with it. But just understand that what you see in Credit Karma is not what the banks will see when they run your credit. Is not what the car companies will see when they run your credit, because they use more stringent guidelines than what Credit Karma is pulling together. But it is a good self-assessment tool around generally where you are, where it comes to your credit. So I do all of it, actually. I do Credit Karma, Credit Sesame. I take a look see at all of those apps. I'm not a huge app person. I did talk about the phones, but there are quite a few different budgeting tools. Forbes has a finance app that they have just launched. So does the Wall Street Journal. Um, Sorry, I'm trying to see if I have the names of those apps right now.
Okay, and I can always put them later in the comments.
Yeah,
So
let me go ahead and take a look see later, because I'm not really an app person, but there are lots of budgeting apps. There are a lot of investing apps that you can use to really help you think about what your plan is. And I think that's probably the most important thing, is like really sit down, you yourself, you with your partner, and think about what is it that we want, right? What kind of lifestyle do we want? Um, a lot of folks are like, I just want to be rich, but what does that actually mean? I would
mhm.
think about it as, what's the quality of life that I want? And the quality of life that I wanted, I went after. And I'm sure most people can figure out what kind of quality of life I want. I wanted a quality of life where I could travel anywhere, where I could invest pretty significantly in real estate. And I've been able to do those things. I mean, yes, I can grow, but generally I live the quality of life that I want to live. And that's how I think it's important to use my money. And I ask people all the time, what's your quality of life? And then you can work backwards from there.
And what I will say to that is, I think those are ongoing conversations. I think one of the things that Anthony and I have benefited from is one, we're not afraid to have these conversations, right? And then revisit it. Things change, circumstances change, whatever. You have more children, you lose your job, you think about, pandemic happens, right? COVID-19 happens. And so it makes you think about your money and your security in different ways. And to be able to have open, honest conversations with your partner about, financial steps, and what that means to write the lifestyle that you want to live, and still maintaining that ideal, hopefully.
Yeah.
Excellent. Yeah, I love that. Yeah. No, that's very good. Well, it's 5 minutes till. I've really enjoyed this conversation. There's so much. I feel like we're just scratching the surface here, because there's just so much, to talk about in terms of uh, financial everything. I mean, finances are our life, right? That's like what makes our society runs. We're a capitalistic society here, and so every day I think people think about money, whether that's about the individual, whether that's about the family, whether that's about, whatever, savings, retirement, you know. And so I think it's really important, again, to have these conversations, start them early, right? Start it with your children, have these conversations with your partner. Um, the last thing I think I want to end on, because you mentioned it earlier and it's in the promo, but explain to us why cash is king and credit is queen. And how do we have a cash lifestyle? What does that mean? Do you do cash envelopes?
Well,
You know what I'm talking about?
no, actually, wait, what is
You
cash?
don't? Oh.
Yes, what is that?
Cash envelopes it's like I don't know, I don't want to say it's a craze or a trend. I don't know, maybe it's been around, but some people believe in zero credit scores and just using cash and not actually having any credit whatsoever. And so everything is in cash envelopes. They have, cash envelope for X payment. And so that's what cash sort of envelopes are, grocery shopping. And so that you don't put everything on your card, you have actual cash envelopes.
Got
Yeah.
it. So that's very old school. Susie Orman is probably a person who really believes in that. Susie Orman is someone else that you should read. I don't necessarily believe in her entire philosophy because I am not a cash only person. And there are a few reasons why. You can maximize your credit cards in lots of different ways to get so many different deals and really think about. So, if you look at, I travel a lot, et cetera, and I have a lot of miles. But even if I put my credit card on just my normal monthly bills, I'm getting points that I can use to get something for free that I want or need, right? That I don't necessarily have to pay cash for. So that's what I like about credit. It's like something I'm buying anyway. Yes, that's true. But now it is doing more for me because I believe in making my money work for me. When you only do cash, your money's not working for you. It's just existing in as its value, and its value is set. So whatever that dollar is worth at the time that you save that dollar, that's what it is, right? Whereas if I put it into an investment vehicle, or if I use my credit card, I can then maximize the amount of things that I can do with that amount of money, if that makes sense. So that's why I think that, yes, it's always important as much as possible sometimes to pay cash, right? Shouldn't put everything on your credit card unless you can pay off your entire balance, because that's really the key. You don't want to use credit as a crutch and therefore only do your minimum payments, but you do want to use credit as a vehicle to make your money work more for you than what cash can do on its own. And so you do want to keep track of your credit score, etc. If you're in a position where you can pay $100,000 in for a house for a cat, in cash, maybe. I mean, that might be cool. Or would it be cool to like buy $100,000 house, only have to put $20,000 into it, and then 2 years later sell it for 200,000, and all your investment was $20,000 plus your mortgage payments versus the full $100,000 that you put in there? I mean, I guess it depends on your philosophy and your comfort level, is what I would say. But
Yeah.
you see which way I believe.
Well, and I appreciate you bringing up the point about, using your credit card. Use your credit card, but make sure you have the money to pay the balance. Because that's where we often fall into the credit trap.
And that's what it's bad name, right? And don't get me wrong, I'm not necessarily suggesting that, Experian and all the credit bureaus are like amazing things that we should be kowtowing to, but it is the way that our society has set up avenues for us to attain different things. And so while it is set up that way, you just need to be smart about it in your strategic thinking.
I love that. Any parting words for our audience before we end today's webinar?
No, just really understand your financial education, get your financial team together, get your financial house in order, and that is from what's going on now until your future, and protect everything that you have, right? You have insurance for everything. Protect your finances, protect your income. Make sure you have those wills, make sure you have that insurance. And remember, financial freedom is my only hope.
Kwamara, I seriously love you because you drop these little things, insurance for everything. I mean, literally, you probably have insurance for your phone that you're not even thinking that you're paying for. So invest in yourself, protect your family. If you're willing to protect your phone, then you deserve the same investment.
Absolutely. Snap that.
Yes. Thank you so much, Kwamara. Sending you so much love. I appreciate you. Appreciate your insight. Thank you so much for sharing it with us. And thank you, everyone, for joining us today or in the replay. Take care. Bye.